we're recording. Yes, we are. Yo, what the heck is poppin', fool? It's been a while, but I'm back. Just wanted to take a little bit of a break. I had a very busy weekend, but I really planned to film it on the Sunday, but then I just completely didn't have the energy to do that. So I wanted to take a break. And if I don't have the energy to make a video, I promise you I'm not gonna make a video, whether you guys want me to or not, because I'd rather you guys wait and get quality content than me half-ass it, drag the thing on for 40 minutes because I can't explain things properly, or even, you know what I mean? I'd rather drag it on for 40 minutes but have every single minute count. You get what I'm trying to say? So I hope you guys can understand. But anyway, guys, so yeah, here's my Telegram. If you guys haven't already followed it, if you guys are from YouTube, go ahead and click the first link in the description. That is going to lead you here. Okay, so here I basically have all of my entries and a little bit of study material based off of screenshots for strong highs and strong lows, and stuff like this. Basically, you can go ahead and study some of that. And here are some of my entries that I will soon in the future be making breakdown videos too, and I'll be also tapping into some of these today. So I think we can just start off straight away. So with, for example, first of all, you guys already know about the strong high, strong low concept. If you haven't already watched that, you need to watch that. Otherwise, stuff in this video is gonna make, like, most of it's not gonna make any sense. So coming back to this though, guys. Okay. If you guys checked my goal projection video, we like dots. If you check my goal projection video, I was looking for like a kind of like a roadblock, right? I never said that price was gonna sell. I just said that I'm expecting that price runs out these highs here, boom, right? Because it took this liquidity over here, runs out these highs, okay, into this breaker with an imbalance. That was my sort of PD array, if you will. I don't use PD arrays like that, but I know a lot of people who are studying ICT also look at my videos based on the comments, and this is basically a very, it's a powerful kind of array, at least that I've observed. And so besides that, what I was really looking at was, at least from an SMC standpoint, was this buy to a sell, okay, which formed this order block here, right? And that was being induced by this liquidity. So I knew that price doesn't just do this. Price doesn't just like this, right? You see all of these guys? See all of these? Price doesn't just boom. You agree, right? Price goes in its own little thing. See how it goes? Like this, it retraces, it goes and retraces at different points, right? So I knew that price is not just gonna fly like that. It could over time, like now it could fly. In fact, I'm in a buy and a sell, but it could fly right now. Reasons being, for example, at least from an SMC standpoint, we have ourselves liquidity pockets, or at least pockets of liquidity. We have ourselves low resistance liquidity, right? At least on a higher time frame perspective. But to keep things simple, yeah. So price is going to deal with, if you will, it's going to deal with each range, right? And then continue. You know what I'm trying to say? Like, okay, for example, we have this range, buy to a sell. Price hits in there, it deals with it. What I mean by deal with it is that price trades from there, it reacts from there, but then it continues in the higher time frame direction. You see what I'm trying to go with, right? So that's basically what it is. But okay, yeah, enough of that. Let's get into some breakdowns. So that's GU. I want to get into mostly my gold breakdowns because, guys, the fact is that I don't trade EU and GU. Then you may be wondering, oh, Avi, I've seen you trade EU and GU. You're right. But the only times I ever look at those two pairs, EU and GU, is when I wake up today and I'm like, let's go and analyze gold, and I see that there's nothing there. I've analyzed it and price is not where I want it to be. Then I will go ahead and check EU and GU if there's anything clean. But I'm not gonna wake up and be like, let's go analyze EU GU. Like, that's just not in my head because it's just not worth it for me, because I am a swing trader, big intra kind of player. I don't like small ranges unless I'm on my compounding account. You see what I'm trying to say? And the fact is, if I compare how well I trade gold in comparison to EU and GU, I trade gold vastly better than how I trade EU and GU. I understand it better, my win rate is better, and because my win rate is better, I have more confidence, I can use bigger lot size, blah blah blah. So anyway, coming back to this, guys, let's go ahead and analyze a couple of these entries, right? So this one, was it this one? I don't know why my computer's lagging a little bit. No, not that. Perhaps here. That was my buy. I'm looking for the sell here. There we go. All right, so I told you guys that I would be observing sells coming out of this area, right? Now I took this sell, I took this sell and I took this sell. This was a failure to create a lower low. If you observe this, failed to break the structure, right? So immediately I took some profits. However, because of, and I'm very transparent about this stuff, you can even see it on my journal, right? However, give me a second, just want to make sure everything's cool. However, I did get stopped out here. What I was expecting was, oh, failure to make a lower low, and then there was an M5, M15 QM, bearish QM, and I saw, okay, this is going to be used as liquidity, and I sold. You can see this wick, I sold there, but I got stopped out, and that, I'm being 100% transparent with you guys. I did in fact get stopped out of this. Okay, but what I needed to understand is, and I took a buy from here, I took another buy here, I missed this one, right? But yeah, pretty much that's that. But coming back to this, how did I take this trade? Okay, cool, we have ourselves our buy to sell range. Now we're actually finally getting to the gist of things. And what, how many minutes has passed? Like 5. I'm sorry guys for taking so much time. Okay, we have ourselves our POI, whatever your POI may be. Sometimes I mark OBs, sometimes I mark, at least when I'm trading SMC, sometimes I mark OBs, imbalances, ranges, etc. So I'm not here to tell you guys how to mark POIs, and I most likely won't be here to tell you guys how to mark POIs. I'm here to give you guys more insight on liquidity, or at least my insight on liquidity and understanding of the market's movements and how it basically phases, right? So price hits inside here. One of two things you can do. This is going to be a reversal attempt. Why do I say this is going to be a reversal attempt? Well, what is your direction on the daily, my friends? We've taken that liquidity. Keep it very simple. We've taken that liquidity, right? And we've broken the structure. Okay? Very simple. So what's this then? Bullish. Am I right? Am I right by saying that this is bullish? Let me give you guys a little bit of a rundown. Lord have mercy. Give me a second. I can't type because I have this mic above my thing, bro. It's annoying. Well, not above my thing, above my keyboard. It's a little bit annoying. Okay, so I hope you guys understand why this is a strong low, and I hope you guys understand why this is then going to be a weak high. Okay, now price is bullish. We have a strong low, we have a weak high. What we can expect is, for example, price to come trading here and fly off. Blah blah blah. You guys get the point. Okay, but we can take advantage of sell positions in here. Okay, so when we look in this, all right, let's take a look there. What I saw is very simple. Now, I'm not saying that you see your H4 daily POI and you go straight to the M15. No, I'm not saying that. What I'm saying is observe how I've gone to the lower time frame. Okay, obviously because I'm looking for an entry. I'm not just gonna sell with a stop loss above it. It's freaking gold, bro. Okay, so I saw, I believe it was a 30-minute. I have to remember these things. Yeah, but it was a 30-minute QM, guys. It was a 30-minute QM. Over here, which led me to sell this guy. Now, how did I get this sell? I'm gonna break down this sell first, because when I'm looking at this, I can tell that most of you guys won't be catching this sell. I'm just saying a majority of you guys won't be catching this sell because you would rather play it safe, and I completely understand that, right? But I would say that there's a good amount of you guys that will be taking this sell. Now, how you can take this is understand that this is an M30 strong high, weak low, okay, and that's forming in our high time frame POI, right? We've manipulated, we've broken significant structure, and now we want to take a sell from inside here, right? How you can do that is, of course, head down to a lower time frame to see if you can find yourself a point of interest, whatever point of interest yours may be. And you can see over here that in an SMC standpoint, we have ourselves a 15-minute order block. And how you can capitalize off of this position, you can either refine further, right? Which over here you can't see anything besides an unmitigated M5, right? But yeah, you would have just had that little reaction. But you need to understand, guys, never over refine. I'm literally telling you guys, never ever over refine. Again, I'm not a financial advisor or anything like that, but I'm just saying, if there's one horrible thing that you can do that's going to destroy your trading, it's to over refine and over precise, if that's even a word, your trading. Focus on the market's direction. Focus on reactions to higher time frame POIs, be it ranges, OBs, imbalances, and of course understand liquidity. But never over refine your POI to get the best risk to reward, because I promise you it is not worth it. But if it's worth it to you, that's your thing, and I'm happy for you. But to me, it's never worth it for you to get the best RR, but miss trades, and then when price comes back, you get stopped out, etc. But you know, there's reasons for everything, but never over refine. So how can you take advantage of this trade then, Avi? I'm not willing to risk however many pips this is. I'm not willing to risk well, trading view is stupid sometimes. I'm not willing to risk 40 pips for a stop loss, Avi. Or if I want to be really safe, 60 pips, I'm not willing to risk that. Okay, what you can do is wait on the lower time frame for a QM to form. This is already an M15. I would say that you could go to an M1, or if you're not fine with an M1, that's perfectly alright. Wait for something like an M5, M3 would not be a bad idea at all. So if you were to wait for an M5, for example, what do we have here? Price hits inside. Again, before this, right? Before this, let's take a step back real quick. Why am I so confident in looking for a sell here? Number one, 30-minute QM. We've taken liquidity, broken structure. That's number one. Number two, what validates this point of interest is liquidity. Not that it swept stops and broke structure. No, it's always liquidity. Always liquidity. Okay. So I can see over here, what do we see? Even on a H1 standpoint, it's a high that failed to create a lower low. That's liquidity, right? So even if we go to a lower time frame, you can see this, guys. Okay, you can see how price broke the structure here, and it's creating liquidity. Okay, and again, if you guys don't know about resting liquidity, etc., go ahead and check out ICT's channel. He talks about liquidity and a lot more, a lot of bits of information that you guys can take for yourselves. Very helpful channel. Of course, I'm not gonna trash him. You know, I do disagree with some things, but he's you know, given me a lot of insight into smart money concepts at least. So yes, price comes inside, and we will look at a QM. Simple as that. Even if you wanted to use an M15 to M15, you can do that right here. We have ourselves a SH break in market structure, and now we need to observe the liquidity. So if you can see, even from a 15-minute standpoint, price heads up, right? We won't be taking this, or at least for me, right? I personally, for high probability, I won't be taking this. Okay, I will understand that this is an inducement and then take what comes higher with a stop loss above. Now guys, this is something else I want to introduce to you guys as well, right? It is the different types of lower time frame confirmations that you may find. Okay, you may have a higher time frame POI such as this, and the lower time frame may do something like this. All right, just saying that this is pink is the higher time frame. All right, price may do something like, which is the easiest thing to do, this. Price may also do something like this. All of these things can happen. My point to you is to not be so focused on, oh, let's just hit straight into the 1 minute and get the best RR, 1 pip SL on gold, right? It's not about that. It is about understanding what is high probability, what can be used, and what is just plain out low probability. Okay, now when I'm looking at this, let's deal with this for a little bit. If price comes back, will I sell? It depends on whether I am willing to risk this sell. Me personally, I consider this a medium probability setup for a lower time frame. Why do I say that? Because I prefer, that's just my standard operating procedure, I prefer liquidity to be induced first. Right, for that to be a liquidity inducement first, and then I take this guy. That's just my high probability setup because I've seen it work a lot more aggressively. I've seen it work a lot more often when I'm doing something like that, waiting for liquidity being that something. Okay, does not mean that you are wrong by doing this. This is just a regular QM where you are catching the right shoulder from the left shoulder. It's just a head and shoulders pattern, and you're catching the right shoulder. That's all it is. There's nothing wrong with doing that whatsoever because this is based on the lower time frame. Okay, so I want you guys to understand, I'm not here to tell you, oh, which one to choose. I'm here to tell you these are all the ones that work. You pick which one works for you. Okay, now when it comes to this, right, of course, you can do something like that. Price can do something like that. Price can do something like that. Now, because I don't use SMC anymore, but back when I did, what did I do personally, okay, to tackle situations like this? Do I wait for something like this? Do I wait for something like this? Or do I just take it like this? Do I take it like this? There's so many you could do. Am I right, guys? Like, you're confused right now. Which one would I personally choose? Well, let me break something down for you guys. One of the only times, I can't say the only time because it really depends on my mind state at that point, what I think I'm comfortable with risking. One of the main times that I would do something like this without looking for inducement and just sell here is if price trades to the extreme ends. Then I will take a sell with a stop loss above. But me personally, I won't take a breaker sell or like a support turn resistance sell. That's just me though, right? Because I know that if price does this, there's a high likelihood that price is gonna do, oh, take the liquidity, guys. SL to break even. Screenshot this trade. I sold here, guys. See, I sold this. Okay, SL to break even. Screenshot, post on Instagram stories, and then price takes the liquidity, and then boop, and then you're like, hold on a minute, it's just retracing, guys. It's gonna come here or something, right? And then it does something like this, and then just goes up all the way. Or if you're lucky enough, price, well, not lucky enough, it depends on your high time frame setup, of course, right? Price comes in here, sweeps you completely dry, then you're like, damn it, I got hit break even. I think, you know what, guys, this high is not safe anymore, and then price just freaking tanks from that. Have you guys ever faced this, right? Especially this part here is incredibly important to you guys' knowledge, so I would highly recommend you guys focus on what I've just said here, right? Price, goes down, takes the liquidity, and look what happened here is we've taken the liquidity, we've broken the important structure. This is strong high, this is a weak low, right? Liquidity, and then price just goes up and retraces. There's a reason for everything in the markets, guys. So when you understand these reasons, you will be able to understand where major swing points are likely going to happen, etc. So coming back to this though, price, you know what I mean? I personally would not be taking too many like sells or whatever from the breaker. If I want to take something like this, I will take it straight from the source of the move. That's just me, right? There's tons of times, not tons of times, but there are a lot of times as well where I've faced instances like this where price just comes in, not on gold though, usually it's on like EUGU, price comes into the breaker and it just drops, just falls, right? That has happened. I'm not gonna lie to you guys, but me personally, a high probability for QM, I will prefer if it goes to the source before dropping, but if it just does something like this, I will expect price to come to the top again and liquidate. Now, another question that I saw in my DMs, not actually in the comments, but in my DMs, was a little bit of confusion as to about the whole strong high, strong lows, be it on a higher time frame, be it on a lower time frame, right? Regardless, it works the same. Does it make a difference if a QM trades into the range and then you take this entry? So meaning price makes the liquidity as a reaction to, like, your range is here, right? Buy to sell. If price makes the liquidity in the range compared to if price does something like this, where it's not in the range, right? To me, it makes no difference whatsoever, right? If price can completely break, right? So break the structure, strong high, weak low, and not even trade back into the range, not even come back in, but create the liquidity. It can do that. Or it can come back in, create the liquidity on the first touch, drop back down, and then come back up. These are two things that it's still liquidity. Liquidity is still liquidity here. Okay? So that is something that I want to point out as well. And a little bit more of a recap. Again, guys, the way I approach, see, this is the simple thing. When you guys are like, Avi, I want the LTF video, I completely understand you and I respect it, and that's why I'm creating this. But you need to understand what I'm doing on that, or what I've done in the lower time frames is the same thing that I'm observing on the higher time frames. Meaning the same old strong high, strong low, inducement with liquidity, I enter. SL above the strong high. Simple as that. That's all I do on the lower time frame. Once price has entered a higher time frame, QM, or higher time frame, strong low, strong high, whatever you want to call it. Okay, now other methods of doing this, of course, what was the other one? Oh yeah, of course, it's just like that. Price can create a failure to create a lower low and then make a weak high here. Because guys, what a weak high is, or a weak low, okay, in this case a weak high, is when price fails to create a lower low. Okay, when price fails to create a lower low, there's no inducement, nothing, price just comes up and then we fall. Right? It's compression, all the S&D traders. Compression over here is a supply turned into demand, or what's the other word? Sorry, demand turned into supply, my bad. And then, there's compression, let's sell. And then it does a last push and then freaking takes you up because you fail to understand the liquidity. This doesn't just happen to S&D, it happens to every single person as well. But yeah, so pretty much understand these concepts, understand these rules. So when it comes to gold, you can see I'm actually in a sell here. I'm actually still trading. Today's a trading day. Today's what, Wednesday if I'm not wrong, or Tuesday? Today's Wednesday, yeah. There's some high volatility news in New York, so I'm really waiting for what happens then. But yeah, so basically what's happening right now is I'm in a buy from here and I'm holding this guy because of the breakout. We have ourselves a breakout. I'm holding the guy. But I've also taken a buy here based on last night. Taken a buy here, and then today I've taken a sell from the very top, but I'm break even. So if price comes up, unfortunately I get stopped out at BE. But yeah, I may do a gold projection video after this, I'm not even sure. But yeah, so price comes inside, okay, 30-minute QM, price hits inside the POI that's created after the 30-minute QM, and we can sell. Simple as that. So if you look at the 15-minute, you can sell above this, right? If you look at a lower time frame, which for me I would have looked at a lower time frame, right? I can so obviously see this entire thing is doing this. I think you guys can see it as well. right? I think you guys could probably see it as well. This is basically what's happening. Oh, Avi, which one do I sell from? Do I sell from here? Do I sell from here? Which one do I sell from? Where is your strong high? That's the only question I'm asking you right now. Where is your strong high? Is it this one? Or is it this one? Now the next question I ask you is, where's your safe stop loss? That's all you need to care about. Which high do you trust? Which low do you trust? Where's your stop loss? That's all. That's all you need to care about, in my opinion. That's all you need to care about. If you sell here, but price dips a little bit above, right? But your stop loss, because you understand strong highs here, what's wrong with that? What's wrong with that? Oh, you don't get a very precise entry. Who cares? You're still getting your money out of it. Am I right? You're still getting your money out of it. So who cares? But anyway, coming back to this. Okay. This is our liquidity basically. And then this one price didn't actually break. If you observe here. Where was it? Yeah, this one here. Price, I drew it a bit wrongly. Price didn't break, let's say. So price is done something like... something like this. There we go. Much better. This one's a bit clapped. There we go. So where do we sell from? Well, we need to understand something. Where do we break? Where do we take liquidity? Very simple. We took liquidity into our POI that's here. Right? We draw our POI. Okay, we took liquidity into our POI. And this is not the break. No, this is not the break. Hold on now. That's not the break. This is the break. Bam. Strong high. Weak low. Oh, price creates a new low. Weak low here. Price then takes, let's say, does something like this. Boom, boom. Alright? Heads up. Will you sell here? No. Me personally, I won't. I won't personally. Right? I would prefer a sell from here. Because if I sell here, alright? Oh, Avi, look, there's liquidity inducing this POI too. How come you're not selling here? I understand that completely. And you're probably going to get a reaction off of this. But where are you going to place your stop loss? You're going to sell here, place your stop loss here. Okay, what if price just does this then? Right? I would prefer take the liquidity here. Because then I can keep a stop loss here. Maybe 1, 2, 3, 5 pips if it's on EU. Right? So that is what I would do in this scenario. Okay, and you can see how this scenario that I've just drawn out for you guys is exactly what happened here. We came, we took it. Okay, where's your POI for entry? As I've said countless of times before, price can easily come, take your liquidity, stop loss above, and then just dip. It never has to go and fill in some kind of OB or imbalance or whatever you want to call it. It never has to. But if there is one, of course, that's great. Use that one. But, you know, it never has to, is what I'm trying to get you guys. Look, there's no POI, nothing. Oh, Avi, how do you get the entry then? Because I've just told you guys, you don't need to have a POI for you to enter a trade on a lower time frame. Right? It helps when it's on a higher time frame, but you don't need it on a lower time frame. Okay, so then that begs the question, how on earth did I sell from the very top then? Because if you guys look at my journal, how I got the sell right here. How did I get that sell? Okay, let's go ahead and break that one down. This is a risky trade, by the way. I refined this H4. Okay. All I've done is refine this H4 to a lower time frame, which again, my POIs are different, right? But what you could have done is you could have understood over here is a OB on a lower time frame, or whatever you guys want to use as your POIs, right? I'm not here to tell you guys what POIs to choose, etc. You guys catch my drift. For example, if you catch an OB like that, I don't think it even hit. Oh, it did. Okay, great. So let's say this was not my POI personally because I'm not using this stuff, but if you guys use that as your POI, OB, imbalance, whatever, inefficiency, all that stuff, good on you guys. But what you can see here is basically the exact same thing that I've talked about in every single video. Well, I've only put out 2 videos, but you guys get my point, right? Look at this, and then look at this. Do you guys see how clear that is? Oh, it didn't reach my OB. Tough luck. I never said it's going to reach the OB. Nobody said it's going to reach the OB. Nobody said it's going to reach the OB. But you need to understand your points of liquidity. Liquidity taker. This is all happening in a higher time frame, by the way. And it's a clean break. Oh, the momentum is no one cares about the momentum. It's a clean break of this structure, guys. There's no questioning it. It's a clean break of the structure. And thus I sold. Yeah, I was floating a little bit. Like 13 pips floating. Yeah, I don't care. I mean, what's that, 13 pips? I usually count my pips. Yeah, it's 12 pips. I usually count my pips on my MT4, not on this, because the MT4 has the accurate pip count because it's your broker that you're entering on. But yeah, you get the point. So over here, basically, we have a manipulation into our POI. We have our breaking structure. We have our, what's this? Weak high. Why is this a weak high? Because haven't we failed to create a lower low? Okay, then you guys may be wondering, right, Avi, what if price does create a lower low? What would I do then? Well, let me tell you guys, this video is a very informative video. I just realized that. What if price does create a lower low? What will Avi do? Well, for me, this is all happening on the lower time frame, for example. What will I do? I need to understand that this is not my strong high, but rather that this is my strong high. Let's say price does something like this. What will I do? Well, if I've set out, this is back when I was doing SMC, what I like to do is, I like to set out the amount of trades that I am going to do today maximum based on the setups that could form. So, for example, let's say I set out today and I say, ooh, this is the setup that happened and I would love to sell from this whole area, but I'm not sure. Will I sell from here? Will I sell from here? I'm not sure, right? I do know my safe stop loss is above the strong high. What I will do is say, all right, let's say I'm willing to place 2 trades today because this setup looks really good. I'm willing to risk 0.50% per trade because it looks really good. So I'm basically basing the amount of trades I'm taking today based on this setup, which is what every single trader does. If you realize it, every single trader does that. We see a setup form, okay, and we're like, I'm going to risk that amount for this trade, right? If you get stopped out, we get stopped out. We'll either study what happened or stuff like that. So when I'm looking at this, there's liquidity, okay? Buy to sell. There's liquidity inducing this point of interest. What I would absolutely love is I would prefer a lower time frame QM. Just like this would be enough, right? If you want to have a high risk trade, you can sell with your stop loss above here. You can sell with your stop loss above here, or you could understand something, which is that after price has broken the structure, we played here, and this is the inducement. So my smart money sell, quote unquote, is going to be above the high. That's something that I would do. But if you guys, don't want to miss too many trades, which for me, I don't care about missing trades. That's the thing you guys need to understand. I really don't care about missing trades. I care about being right. That's it. I want my win rate to be high because then I can risk more per position and then I can get more money. Simple as that. Literally that's it. I want to focus on having a high win rate because if I have a high win, because I already know my risk to reward is going to be fantastic, right? You could start out wherever, but for me, my risk to reward averages between 6 to 20 R. When I was trading SMC and stuff like that, and now I'm using a different method, so I'm trying to learn more about this new method, and I'm trying to increase my RR with this as well. I average about 1 to 5, but I'm risking upwards of 1% per trade. So if I get 1 to 5 R, it's not 1 to 5 R just for show. It's 5% in my bank account, or rather in my trading account, which is great, right? So you can understand here, we took the liquidity, broke the structure, induced. And this is your strong high. So a safe, if you want to talk about safe play, not foul play, but safe play, you will want to take a sell from the top. Simple as that. Very simple. Don't overthink. Very simple. All right. And you can see how that's played out here. So how I would be marking this out on my charts would be incredibly simple. Just like that. I should probably mark this different. Just like that. And my stop loss is above. Simple as. As you guys know, I didn't use SMC for this technique, but I'm telling you guys how you could break this down using SMC. This is how you could have done it. That's how I'm telling you guys, right? And so yeah, pretty much that's that. How long is the video? I just want to know. The video is currently 28 minutes. That's fine. I think it's jam-packed with information, so it's alright. Oh no, it looks like I'm gonna get hit break even. It's cool though because I do understand that we're bullish, so it's really fine. But yeah, I do want to do a gold outlook. I'm not gonna lie. I do actually want to do a gold outlook video. 1 second. I just want to check something out real quick. Yeah. Okay, cool. Yeah, I do think I'm not gonna do a gold outlook in this video though. Nah, I'm not gonna do that. Anyway, how did I catch some of the other sells then? Because I'm looking at this, I did catch a few other sells. So how did I catch this sell, for example? All right, then we've gone over that one, so that's fine. Yeah, we've gone over all of these. I think what we should do is run through. okay, some of my cells. So for example, I took another cell here. If you guys don't believe me, all of my entries are literally in here. There we go. I told you guys, I don't lie. That's my another entry I took. So how do I take this one then? Well, price did stop here, stop out. If you notice, guys, all of my entries are after manipulation. Do you guys notice that? Like, all of my entries are after the manipulations happen. Here we have stop losses, we've manipulated, and then I start looking for my entry. You see how that flows, right? So yeah, you could have gone into the lower time frame right here, and what I saw was basically in here, the M1 in here doing this. That's all I saw in the M1. Let's go check it out. Maybe I'm lying, right? Let's go and check it out. Hopefully we can go that far. Yeah, we can. Okay, great. Because I don't have TradingView Premium. So okay, why don't I have TradingView Premium, Avi? You're a great trader. Because I use MT4 more for my analysis, not TradingView. TradingView is just for YouTube and stuff like that. Well, I used to use TradingView, but I prefer to use the MT4 because it's the broker feed that I'm using to place my trades on. So I guess that only makes sense, right? But anyway, coming back to this, I can see price never reaches here, price reaches here. What on earth is this? There's no structure that's been broken. Yeah, there's manipulation here, but you can't consider this an M1 structure. You can't. This is not M1 structure. This is just a rally-based rally, or rally-based rally, like on a lower time frame, like on the seconds or something. That would be like a structure, sure. And if you wanted to take advantage of that, you probably could have. But no, M1 structure, when price came in here, all this is doing is just this. That's all it is to me, right? And then if you look what happens, price takes the liquidity and reverses, okay? Price reverses, takes this liquidity, right? Now look. Hold on, what am I looking for, guys? I am looking for manipulation. I'm looking for a significant structure break. I'm looking for inducement. I'm looking to enter above the inducement. Clear? Are we clear? I hope we are clear. Okay. Again, guys, inducement is not the exact same as liquidity. Inducement is my bad. Inducement is liquidity. My bad. Inducement is not the same as structure. However, structure can be the same as inducement. I hope that makes sense. Think about that for a little bit. Anyway, coming back to this though. Manipulation, right, of the entire thing. And break of significant structure. After that, look what price does. Liquidity. Simple as that. Enter above, stop loss there, and you're in the money. That makes complete sense. Now, let me talk to you guys about something. What if price, let me put you guys on game here, right? Psychologically, because it's just the same thing I'm repeating over and over again, but what if price does this and stops you out? Oh shit, Avi, I've been stopped out. Your method's shit, or your approach is crap. What do we do here, my friends? Well, you need to understand where you are trading on the higher time frame. Then what you need to do is identify when the next structure break is going to happen. Price could do something like this. New York session or something like that. Maybe this happened during London. Okay, you got stopped out. But let's say here we're still trading in a higher time frame. New York session or something like that. Boom. Something like this happens. Or just something like this happens. Boom. Real calm, real chill. Right? Why does price retrace? Because we took liquidity, we broke structure, we induced this POI structure, price retraces. You can take yourself. Who says you can't? You can take yourself based off of this. Because why? Strong high, break structure, weak low, and you have the liquidity, the low resistance liquidity build up. New York session is starting, or has started, or it's just opened. Let's say New York session is just opened here. Okay, you can take it to something like that. You could do something like, and of course you're in a higher time frame POI, but you need to understand where you're trading. Once you get stopped out, relax, stop staying on that low time frame. Stop it, get your ass out of the lower time frame, find out where you're trading, find out where price could potentially be pulling towards, right? Then you wait for maybe you want to wait for a session timing, because I know you SMC traders are so interested in the session timing, right? It's fine, there's nothing wrong with that. Wait for your session timing perhaps for an extra confluence, or just observe lower time frame breaks of structure to form new QMs. Simple as that, right? And I'm telling you guys, when you implement liquidity, it's going to give you a lot more confirmation. It's going to give you a lot more confirmation, a lot more probability, a lot more confidence thus, you know? So I hope you guys understand that. But yeah, this is a very simple trade this guy was. And I don't want to make these videos too long, guys. Oh, I've definitely got hit myself out of break even. Let me check my position real quick. Yes, I'm hit out of break even on that one, but we have ourselves some beautiful runners over here. In fact, let me go ahead and screenshot this for you guys real quick on my runners. Unfortunately, guys, we did get hit break even on the sell. It is what it is, though. As I told you, we are bullish on the higher time frame. I am just gonna real quick send this out to the telly. You know what, I'm not gonna take you guys' time on this video. That's very selfish of me, I apologize. Let me just, all right, okay, yeah, I'll send this out on the Telegram in a second, guys, but I do not want to take you guys' time. Anyway, yeah, so this is actually going to be great for me to do a gold projection video on. I hope you guys understood a little bit on the lower time frames. What we're going to do next, guys, what we are going to do next is simply this. I'm going to go over Euro USD and other pairs, because I know a lot of you guys are not very fond of trading gold. We're going to go over strong highs, strong lows on Euro USD and stuff like that. So let's go over this next time in the next video. I'll film like 2 or 3 videos today because I'm having the energy. I'll do it. And see you guys in a bit. I hope this has helped a little bit. Like if you want, dislike if you want, subscribe if you want, comment if you want. See you guys in the next one. Peace out. Hope I've helped, though. It's something I hope I've helped.